Today, Bitcoin and Ether head for another week of declines. Shares of Marathon Digital fall even after the company reports record earnings. And Cleanspark CEO Zachary Bradford breaks down that crypto miner's acquisition of 2 mining facilities in Wyoming. Brandon Gomez. Major cryptocurrencies moving lower this morning. By noon Eastern, Bitcoin fell a little less than 2%, back under $61,000. Ether dropped 2.8% and is back below $3,000, while Polygon's Matic token fell 2.9% to 67 cents. Now we are looking at another week of losses for some of the biggest cryptocurrencies, with Bitcoin and Ether down 1.5% and 5% respectively. Okay, let's talk about the top stories. Kraken has asked a federal judge to dismiss the SEC's lawsuit against it. Back in November, the regulator alleged that Kraken operated as an unregistered broker-dealer and exchange, along with inadequate record-keeping that would be prohibited by a registered securities intermediary. Well, in a filing yesterday, Kraken argued that the SEC failed to prove that the transactions on Kraken's platform were investment contracts, and the agency's argument would transform the sale of any digital asset or commodity into an investment contract. Kraken said it thinks Congress should be the one to decide such a significant reordering of U.S. financial rules. Next, shares of Marathon Digital are falling this morning despite the crypto miner reporting record revenue. The company reported $165.2 million in revenue in the first quarter, up 223% from a year ago. But that's still less than Wall Street estimates of $182 million for the quarter. The miner also reported a 184% year-over-year jump in net income to $337 million. Now, that spike is mostly due to a change in accounting standards for the Bitcoin miner, which raised the value of the digital asset it's holding. That coincides with a huge rise in Bitcoin's price in the first quarter of the year. By midday, shares of Marathon Digital were down nearly 10% in reaction to yesterday's earnings release. Finally, another publicly traded mining company, Cleanspark, is expanding its operations. The company announced yesterday that it's acquiring 2 mining sites in Wyoming for just under $19 million. Those facilities will add 75 megawatts in available power to Cleanspark's 400 megawatts currently under management across 8 sites in the southern United States. The expansion announcement comes after Cleanspark also reported earnings yesterday. The company brought in $111.8 million in revenue for its second fiscal quarter, beating Wall Street estimates of $106 million. All right, sticking with Cleanspark for our main story, Crypto World's Tanea McKeel spoke with Zach Bradford, the CEO of Cleanspark, about this latest acquisition and how the company is faring after the Bitcoin halving.
You announced earnings yesterday. You announced a new expansion in Wyoming. Tell me more about this latest acquisition.
Yeah, we're really excited about Wyoming. We're moving to another state. This will be our 3rd state. We are going to have 2 sites in which we will be building Bitcoin mining data centers. We expect it to be about 75 megawatts of total power between the 2 sites, and we have the ability to expand beyond that.
For those in the audience who don't cover the mining sector so closely, can you put the 75 megawatts into some context for us?
Yeah, so all in all, we think about everything in processing power. So to put that in perspective, right now as a company, we have 17 exahash. That's how we measure processing power. This new facility is going to allow us to add about 4.2 more. And so, as a company on a post-halving environment, and we could obviously talk a lot about halving, but that really means that we're going to be producing between 400 and 500 Bitcoin every month, as we are now. So this is going to be, roughly call it a 20% increase in that, depending on how things land and what the network's doing in a few months when we're finished with this.
These 2 mining sites in Wyoming, are these sites that you've had your sights on for a while, or is this something that you're scooping up post-halving?
We've kept an eye on Wyoming for a little while. We've had our earliest conversation with the utility actually going back a few years when our former CFO had some family connections in Wyoming in the same area. But we put it down and walked away from Wyoming for a while. And this was actually a new opportunity, something we became aware of, only about 5 or 6 weeks ago. And it was just a great opportunity, right time, right place for us to come in and scoop it up. We've been preparing for these opportunities for quite some time. And now we thought was the good time.
What is it that brought your attention to Wyoming? Why is that a good market for, the kind of operations you guys are running?
We were really attracted by the political welcomeness of the state. Senator Loomis has been a long time big proponent of, blockchains and Bitcoin in general for a long time. And so we saw it as a place, just like the places we already operate in, Mississippi and Georgia, that it's a place that's welcoming of, blockchain technology in general. And so we thought it would be a great home. In addition to that, Bitcoin mining, we are operating data centers, and heat is always the, opposite of what you want in a data center space, all about the cooling. And Wyoming is just cooler year round than some of the other places that exist in the US. So it's a great environment in the literal sense, and also a great political environment also.
How are you feeling about everything post having you guys reported your financial results for your latest quarter yesterday? Earnings per share of 58 cents versus a loss a year ago of 23 cents per share. Of course, Bitcoin up 120% over the last year. So, how are you approaching growth now, given the lull that we're experiencing in the Bitcoin price? We have these two big key catalysts behind us: high inflation, slowing economic growth, geopolitical issues, what have you. I know, you and a bunch of your peers in the industry were well prepared months in advance for the halving, which of course reduced the Bitcoin block reward for miners. So now we're just a couple weeks out from that big event that was so widely watched this year. How are you feeling about it?
We're feeling great. We as a company, we've been lucky enough that we did prepare ourselves. Luck's really the wrong word, but we made sure we were ready to go. We've been the only public company that has outperformed Bitcoin. And I think year to date, we're the only public company that our stock is actually up for our shareholders. So we're really happy about that. That helped us prepare for where we are today. And, we are running strong. So the block reward, or the number of Bitcoin we get on the baseline, was cut in half. But we were set up so that it was really just a compression of margins and didn't affect anything really on a long-term basis. We're seeing now that the global hash rate's decreasing a little bit, 15 to 20%, which signals that the miners that were less efficient or less prepared have actually had to unplug. And that creates opportunities for us, for companies like us, where we're in a really strong position, that we can capitalize on that, either through buying the data centers or the fact that the piece of the pie, which is global hash rate, ours got bigger. We're currently about 3% of global hash rate, and things are looking good for us to continue to increase that to a much higher percentage over the months and years to come.
Um, What, if any, challenges are you looking forward to over the next few weeks? I mentioned the lull. It's only been a few weeks, but some analysts warning about a pullback to 50K in Bitcoin. One analyst even said 49K, so below that $50,000 level. Um, is there we've talked about this a little bit before, but is there a certain number in the Bitcoin price that you are most comfortable or uncomfortable at? And, I know we're talking short term here, and you seem very set up. You've just said for the long term. Anything you're worried about in the next few months?
Obviously, there's things we can and can't control, and we focused on what we can control. But what that means, being prepared, means to be prepared for Bitcoin price to drop, right? We're all doing great as miners if the Bitcoin price always continued to go up. But it's what happens when you have to battle through the tough times. We're incredibly well prepared. I think something that would be, really important for any investor looking at the space to understand is really, hash price. That means really for every, hash, or the, processing that we do, how much is that worth right now? And then how much does it cost us to do it? We right now are set up amongst the lowest of all the publicly traded companies that have reported on our hash cost, or the cost to ultimately mine a Bitcoin. And as long as we can stay on that bottom, we're really at the bottom, quarter, that means there's 75% of the miners that will be mining at a deficit or will have to turn off before we have to worry about turning off. And every time someone else turns off, it makes our piece of the pie bigger and therefore further and further away from us needing to turn off any machines. So for us, that's how we think about positioning. So absolutely, there's always a concern. It's a volatile asset, but on a long-term basis, we're incredibly bullish on the direction of Bitcoin, on adoption. Today we're seeing a pullback, but we're really trading inside a band. We've been bouncing around for about 3 weeks in this like $59,000 to $65,000 band. And I think that this pullback is just, pulling down to the bottom end of the band. And, if it does slide further, we're well prepared for that to continue to remain profitable. And if it bounces back up in the other direction, then it'll be good for not only us, but also some of our less efficient peers.
All right, that's all for Crypto World this week. We'll be back again. See you then.